Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. So just a quick update on the price of Bitcoin and what it's doing. So yesterday we said that we were most likely at a bottom, given that the price had reached the bottom of our channel and it was showing signs of strength moving up. And we did end up getting a small but still significant green candle yesterday, a daily green candle. We're on the daily chart after 4 red days, 4 red daily candles. And right now, although we're in the red, it's highly likely that we're going to make this one green as well. We're showing signs of strength on the smaller time frames, which we'll see in a second. The stochastic RSI looks like it's bottoming out, but it can stay on the bottom for some time, just like it stays on the top for some time. So that's not too much of an indication, but it's something. But the most important thing on this chart is the 21 EMA. So this exponential moving average, if you're subscribed to this channel, you will know that it is a strong indicator of an uptrend, and price tends to ride it on an uptrend, as you can see. So the exponential moving average, the 21, which is this yellow line on this chart, crossed the 55 over here. It crossed the 144 over here. And ever since those crosses, you've been getting an uptrend, right? And now it's coming down. And what does it do? Just as it did here back on August 4th, after 4 days down, we retested that 21 exponential moving average, then followed it up with 5, 6, 7 days up. And once again, it seems that we're coming back to retest this 21 exponential moving average, and we may already be there. It doesn't need to physically touch on these charts. It just needs to come really close, and it's pretty much there. And this EMA basically responds to price action because it's an average. It's a dynamic kind of algorithmically calculated trend line based on price action. So as price goes up, it'll also go up slightly. So it'll come close. So it seems like we've tested this, and we should bounce off of that. So that's the daily. So it looks good. And again, we're at the bottom of our trend line. We barely just broke the bottom. And so price action's respecting this, although we've been dumpy. We've been sort of on almost week-long downtrend. We've still respected the limits or the support of this rising channel. So that's a strong sign. That's a sign of strength. That's a sign of good market structure. Okay, so let's go to the 4 hourly to see something more interesting that I want to show you. So here, you'll see the stochastic RSI is showing bullish divergence. So what's bullish divergence? Divergence is when there's a difference, right, between what you see on the charts and what you see on this RSI, which is the relative strength indicator. And the stochastic relative strength indicator is a little different than the regular RSI. And you can look it up, and I encourage you to look up the difference. I'm not going to explain it here. It's a bit technical. But anyway, you see on the stochastic RSI, these two highs, right, are clearly, this is a higher high, this is a lower high on the chart. And let's just draw this out really quickly so everybody can see. So this right here, this is what I'm referring to. Higher high, lower high. But here in the stochastic RSI, you have a lower high and a higher high. That's a divergence. There's a difference, right? So here we're going up, and here it's clearly going down. This is a 4 hourly chart, so it's relatively reliable in terms of the trend it's indicating. And this basically indicates that on the 4 hour chart, you're having there's bullish divergence, there's bullish action forming. That pretty much shows that this is an inflection point, meaning that this is a low that's soon going to switch. The trend is going to switch to a high. It is possible to break this divergence and invalidate it, but what we're seeing on the daily, what we're seeing here on this chart, how we're seeing support here on the 55 that hasn't even been close to touched, it's likely that we are on an uptrend. So that's pretty much Bitcoin for today. For those of you wondering why I may not be doing altcoins right now, is in a downtrend, whatever altcoin, except for a small minority of altcoins, whatever Bitcoin does, given Bitcoin's dominance in the market, they are also going to do. So it's very important to just look at the price of Bitcoin. And the last thing I'll say is this, although we look at this price daily, and I think it's important as investors, as traders, to look at the daily price, see what's going on in the market, and Bitcoin is one of the best indicators for the larger market trends, even when Bitcoin dominance is relatively low. It is important also to zoom out and look at the larger sort of trend. Look at what's going on, right? It looks really bad when you're looking at the hourly chart and you're thinking, oh no, everything is going to zero. But then you zoom out a bit and see that we are on a strong uptrend, and we came from all the way down here at 30,000 and had a massive uptrend that took us from 30,000 to pretty much 48,000. Got rejected at 48,000, and now we're at 44,000 and 300, trying to find support for the next run up. So that's relatively healthy. Bitcoin is in an uptrend. So just a little bit of perspective. When in doubt, zoom out. It's very important. It's not only important for as an investor to know what's going on, but also as a trader to make good trades with less. You don't want to carry the volatility of the market into your decision making, right? Unless you're scalping, of course, which that's not. Unless you're really good at trading, you don't want to be scalping, and it's high risk, high reward. But for good long-term trading, you want to just zoom out. So that's pretty much it. Hope that was helpful. Hope that was useful. Have a good day. See you tomorrow. Bye.